Hello, and thank you all for joining DPW Holdings 2017 Financial Review. We're going to start the presentation in a few moments, but we'll begin by reading the Safe Harbor Statement. This presentation contains forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995, including, but not limited to, statements about DPW Holdings, Inc., DPW expectations regarding the market demands, future financial performance, the implementation of strategic plans, and future growth. These statements are made based upon current expectations that are subject to known and unknown risks and uncertainties. DPW does not undertake to update forward-looking statements in this presentation to reflect actual results, changes in assumptions, or changes in other factors affecting such forward-looking information. Assumptions and other information that could cause results to differ from those set forth in the forward-looking statement information can be found in this presentation and in DPW filings with the Securities and Exchange Commission, including its most recent periodic reports, including the risk factors listed in the Form 10-K for the year ended December 31st, 2017, as amended, available on our website and on the Securities and Exchange Commission's website, www.sec.gov. With that, I would like to introduce Milton Toddalt III, who will be leading this call, along with Will Horn, the CFO of DPW Holdings.
Hello, everybody. I know that 10K was filed with about 8 minutes to spare. I hope you all enjoyed that as much as I did. Clearly, there have been a lot of changes in 2017. One of the things about being a small public company that you get into this gap of filings, and when you file in April for what ended in December, you then have a Q due, so you get into this kind of dead zone where you file a K, but you still have a Q coming. So keep in mind that in about 30 days or so, we'll be doing this again. But some of the things that I'm very pleased with is that, we've converted to being a diversified holding company. We're following a multi-strategy approach. It's an evolution of the company's growth. By the way, everything I'm talking about will be in a slide presentation that will be presented to everybody later in the day. It'll be available along with an annual letter that I'm writing about the company. So you'll be able to read the annual letter later on today, early tomorrow, and you'll see a nice slide presentation about what we're talking about today. But I will cover some highlights with you, and we'll take some questions. So right now, the company, as you saw earlier, has broken into 3 categories now. There's Coolisys Technologies, Digital Power Lending, and Super Crypto Mining. Those are the 3 core subsidiaries that we're going to talk about now. Now, many of you know that there are subsidiaries beneath the subsidiaries, like in the case of Coolisys Technologies, owning Gresham Power, Microphase, and other commercial and aerospace businesses that have been around a long time. But I'm going to continue on with the call, and we'll categorize each one of them as we talk about them. So, as I said earlier, there are 3 main subsidiaries now. There's Digital Power Holdings, the parent company. And as we report forward, we'll be reporting about the 3 main subsidiaries, and then from there, we have 3 main investments. So, Coolisys Technologies, we own 100% of. Digital Power Lending, we own 100% of that. Super Crypto Mining, we own 100% of that. If you go to the right side, you'll see that we own 74% on a convertible basis, a beneficial ownership of MTIX International, which is on the OTC, it's a symbol AVLP, that owns MTIX Limited, the company that gave us the purchase order many years ago. We've made a substantial investment in that company, which we'll cover later in the presentation. The hope there, and I want to cover the OTC company a little bit, is the hope there is that they'll be current sometime by June or so, and that we will apply to list the company. They intend to try to uplist to the NASDAQ or the New York American. There's no assurance that the New York American or the NASDAQ will accept them, but we are confident with the business model that's growing at the textile business that that'll be a substantial part of the company going forward. One of the other positions we have is we still have a 9% position in WSI, which is WSIC, WSCI, I mean, on the NASDAQ. And then we own a 4.5% position in Sandstone Diagnostics, along with some other minor positions in an employee placing firm and things like that. The smaller positions I'm not going to talk about today, but we'll as they grow, we'll make them more clear as we move forward. So I'm going to cover the financial highlights real quickly, and then skip to a couple direct things about the company, and then we'll wrap up the call. So sales increased over last year, 33.95% to $10,175,000. 174,000 of that was affiliated revenue from the MTIX $50 million contract. What's misleading about that, and I have to be very careful here, is how production accounting. So what you'll see in the first quarter and the second quarter is a dramatic, a pretty big move in the revenue recognition of the machine deliveries taking place in the first quarter, second quarter, and into later in the year. So that contract is well underway. We're very pleased about that. That's something that I want to emphasize on the call. It's going to be part of our dramatic revenue growth from $10,175,000 to what we hope will be $44 to $49 million for 2018. I can't emphasize enough that as a holding company, there's a lot of opportunities when you report, for example, we're not doing this as of right now, but for example, since some of the subsidiaries are smaller, you can report them 90 days behind. So you'll see a revenue mix into 2018 that'll ramp that revenue up pretty dramatically. Comprehensive income. This is a very important part of the company, and one that can be a little confusing to people if they don't know accounting, and that is the company lost in 2016 $362,000 on comprehensive income, but had a gain of over $5,323,000 for 2017. That gain is significant because the way that the financials report this, the way the financials are reported, they don't include it. Comprehensive income is not revenue, but it's a gain in the value of our securities portfolio. Now, that's on something that's held for resale. One of the changes that's taking place in 2018, and you can read about this on Berkshire Hathaway's annual letter, Warren Buffett talks about the fact that his securities portfolio now has to flow through his income statement. We'll have the same effect on securities that are not held for resale, but that are trading securities. So you're going to see a pretty wide fluctuation in the value of the portfolio we own relative to it flowing through our income statement. That's a pretty big dramatic change, and we'll point that out as best we can every quarter. But effectively, if we maintain investments on our balance sheet, and I want to give an example of this. This is really important. Let's say we owned 100,000 shares of Pepsi Cola, and Pepsi Cola went up $5. That would put $500,000 on our top line revenue. That didn't used to be like that for holding companies, but now because of the new FASB rules, it changes the way that we report our revenue. So you'll see different lines now. You'll see our revenue line be one place, right, which is trading revenue and total revenues of the businesses, and then you'll see comprehensive income, which is securities we have a large position in that we have to recognize comprehensive income. Now, this may be affected by what takes place at the lender, because Digital Power Lending is very active now. Billy Corbett is out there pounding the pavement, getting loans done. And is he a presenter on the call today? Oh, that's a shame. Is there any way we could change that? Is there any way we could change that and see if we could get Billy on the call? He's probably listening in. Hey, Billy, if you could, let's get you on the call. I'd love for you to have your input here. But anyway, so Billy's out there pounding the pavement, Digital Power Lending. That'll show up in comprehensive income, because when he lends to certain companies, if he gets warrants or any kind of stock participation, that will hit the comprehensive income line. I'm going to move on to gross margins. There was a gross margin improvement to 37.8% versus 35.6%. I expect the gross margins to improve because there is some service software revenue. It's a little misleading, but there's service revenue that takes place with those machines, and so that's really kind of a higher margin revenue. So they're creeping up a little bit in terms of gross margins. This is a really important number here, and that is our total value, means total assets, improved from, we ended 2016 with $5,472,000 worth of assets totally, and we increased our asset base to $30,510,000, which it's a big increase of about 457%. That asset base is what we'll be earning off of going forward. So this will be driving some revenue opportunities as we try to get a good return on assets. This is an important measurement for me. I know there's a lot of people talking. I hear a lot of questions about dilution. To some degree, it's done in a way that I think if a person really studies accounting, and that is, issuing more shares can be a very negative thing unless you're getting a good rate of return on that deployed capital. And you go to the next slide, you'll see that our book value increased 34.13%. This is the first time we've had a book value increase in 6 years, and it's the most significant increase in over 10 years. This means we deployed the capital and we got a rate of return on that capital, which was accretive to the company. And we're really proud of that part. This will be a measurement that we publish every single year, and we will track the book value, because if you have an asset base of $30,510,000 and you increase your book value off of that, you'll be looking for that number to grow, and ultimately, over time, the stock performance should improve as long as you're building that book value. DPW had a comprehensive loss of $5,931,000 versus a loss last year of $1,484,000, and our total non-cash charges were $633,000. So you could clearly do the math yourself regarding comprehensive loss versus non-cash charge. You'll see what that number is. We don't report on a non-GAAP basis at this time, so I'm not going to give anyone guidance on a non-GAAP basis or an EBITDA basis, but someone on this call, someone that's smart, will have maybe a little experience in how non-GAAP works, would be able to take the 633 and the 5,931 and do the math and figure out where you are on a non-GAAP basis. Company raised $13,391,000 versus raising $1,279,000 for 2016. The company used $8.6 million of that money to make investments versus 2016 of $1,029,000. And the last part I want to cover when it comes to financial highlights is that our capital cost is severely reduced for 2018, and that will really help the rate of return. If you look at the balance sheet for last year, we did a ton of financings. There were a lot of issuances that were difficult to keep up with for the average person. And I would say that it was, when you're a small company coming off a low base, you're really not eligible for great financing. So you kind of pay through the nose, so to speak. I mean, I consider it to be, downright usury if you ask me, but that's not really the term, but I'm just trying to be candid here. 2017's financings was really expensive, but we did that for the sake of making sure the company grew to critical mass, because when you look at our 10K, you need $6 million for eligibility on the NYSE American. We now have over $18.7 million. So we have 3 times the required capital to be listed on the exchange. That's a really, really important component, and something that I am proud of for the company, because as you all know, when we took over the company in September of 2016, the company was on the verge of being delisted. So we accomplished a big goal for that year of making sure that not only we maintained our listing, but that we had enough assets to go forward into 2018 and start delivering on some of our promises for revenue growth and helping the businesses grow. Next slide, please. So I would direct you to the 10K when you get an opportunity to see the breakdown of our top line revenue versus our losses. And, if you notice in there was a preferred dividend. I'll generally talk about the fact, is Will on the phone yet? Hey, Will, are you there? I'd like Will to talk about for a second, if he could, the reduction in some of our costs now that we were able to refinance out a lot of those preferred. So Will, when you have a moment, you can jump on, that'd be great. Can you flip to the next slide? Will's been working nonstop for the last 60 hours, so hopefully he doesn't fall asleep on the call. It is, gotcha. So some of the things that I want to cover. Yeah, I thought I heard Will jumping on there.
I am on the phone, Todd. I'm sorry. I did have to switch briefly to take a call.
Hey, if you could do me a favor, Will, you know, I was walking them through the fact that we had some preferred dividends that we had done some financing with, and there was some high interest rate debt and stuff like that. So maybe you could just talk about really quickly the reduction of some of those preferred dividends. I know we paid preferred off, it converted out. Could you maybe just give some general commentary about that financing that took place in the latter quarter of 2017 and how that maybe affects the company going forward with, there's a pretty big reduction in our total interest cost.
Yeah, well, and that's true. So we had non-cash charges, off the top of my head, I'm going to call it $5 million, so round numbers when you look at interest expense. And this is not including dividends. Now, part of that is clearly cash-based, but there was a big portion of it that was non-cash-based. And it really boils down to the beneficial conversion features that are attributed to anytime you issue convertible debt that might have warrant coverage. Because then you've got to figure out your fair values and intrinsic values of different instruments. You have to ultimately recognize a non-cash charge. For instance, when we did the Series C round that Todd is referring to, in the second quarter of last year, we had to recognize a deemed dividend. And so this didn't even hit interest expense. This hit a dividend, and it wasn't even a cash dividend, but it was $319,000 of expense. And again, it's attributed solely to a beneficial conversion feature calculated based upon the difference in the fair value of the proceeds that we receive relative to the fair value of common stock. But what's interesting is if we just common stock at the same place, we wouldn't recognize any expense. So it's one of those accounting concepts that does certainly hurt the income statement for investing for companies that are utilizing debt financing.
Yeah. So Will,
there was a dividend also, a cash paying dividend, and you'll see it in there. It was about $54,000 or $60,000 for last year. It worked out to $15,000 a quarter. That's no longer there.
And the reason why I brought that up to everybody is that you're looking heavily in the rearview mirror of how we're financing, and clearly you can see that the cost structure and our capital costs are going to be a lot lower into 2018 as we accelerate really basically after we filed the K, right? Because this is a big and important moment to make sure that financing purposes we have the eligibility that we do. So that's what I was really explaining to them. Will, obviously I'm going to jump onto Coolisys now. So in focusing on some of the things that are happening, let me talk about Coolisys, and that is we're moving all the assets of Microphase, Power Plus, Digital Power North America, Gresham Power, and ultimately, hopefully, the closing of Enertech, which is supposed to happen, I believe, by the 27th to the 29th. There's been some talk about what days that's are happening, but we needed bank approval in Israel and some other things. We've all agreed, everything's signed, and everything's buttoned up, the financing's lined up. We're in really good shape for this, but we needed final bank approval and some other things that were somewhat difficult. So I think that we picked a closing date of around the 27th. So one of the things you don't see in this quarter is any revenue from Enertech or any of the synergies we get from Enertech. But that's going to add, and Will, if you want to chime in here, that's going to add around, I think, 10 or 11 million in top line. and some decent gross margin to the Coolisys technology group. And when you look at how we're categorizing them, all that revenue will go into Coolisys, and of course, it will consolidate up into DPW Holdings. But you'll have a nice, like, $26 to $30 million commercial defense aerospace business. One of the things that I'll point out that's really exciting about Coolisys is that its largest customer, which is a medical device a manufacturer, has tripled their order for 2018. And so Coolisys is getting nice pull-through in terms of customers. Amos is really doing a good job there of improving the customer base and retaining customers, which is a real important part of the business. So we're hoping to see, for the first time ever, some organic growth from in a long time from the subsidiaries of Coolisys. There has not been any organic growth for many years there. In fact, the subsidiaries there have done quite poorly when it comes to top-line sales, and Amos has had to manage expenses in a big way. I think that he believes there'll be a lot of synergies, and we're really rooting for Amos and his team to provide those synergies. Let's go to the next slide. Digital power lending, and this is something I'm going to focus pretty hard on, and that is we really, it was important to us to get this lender's license. And I know that it took a long time, and it was kind of disappointing that it took so long, but we have it now. Billy, are you on the call now?
I am. I'm here.
Hey, welcome to be on the call. I'm great. You're here. I'm grateful you're here.
Thanks, great
so Billy,
to be here.
I wanted to talk to them about maybe you could explain to them how, with your background, 30 years on Wall Street, how having this license is different, and the loans that you're preparing for external companies that you'll lend to, that'll provide real opportunity in terms of wants and other things for digital power lending. And before I let you talk about it, I do want to say that this is going to be a really important growing component of the company, and we'll be deploying a lot of capital in the lending space. And Billy, why don't you give them a little bit of a background on what you're doing in that space, because this is one of the most exciting parts of what's happening in terms of growth.
Yeah, it really is. I mean, I've spent 30 years as a licensed investment banker, institutional trading member of FINRA. And in this particular situation, what we're doing is we're using these relationships that we've had for over 20 years to both syndicate toward us and participate in deals with us, as well as they're allowing me now, as somebody who has money, to participate with them. In the past, in the investment banking side, you would put together a transaction and the investors would come in and receive warrants and equity or a convertible debenture. And now, as a person who controls capital, I have great leverage in the way I negotiate, both on the private companies as well as the pubcos. So on the public companies, we in essence can do pipes that are at severe discounts to wherever the stock's trading. We develop a warrant portfolio. And what's really exciting is if we enter these equations right with securities that ultimately are free trading through registration statements or registered directs, we can see a situation in the coming quarters where we're very profitable on the lending side. What's exciting is that as a California finance lender, I can get paid origination fees. I can also set up an account where I can start bringing in outside capital, which is very exciting as far as bringing, let's say, Main Street investors into institutional-like transactions. So it's pretty compelling, Todd, when you really look at the overall picture on what we can do on the lending side. And with the permanent capital that we have on the balance sheet that will continue to grow, he who has the goal rules. And in the position that we're in, we can cut significant deals with companies that are very favorable to not only us, but ultimately to the shareholders. So it's very exciting. It's across different industries. We can secure these transactions against, huge collateralized positions on the debt side. So when we give a loan, we have plenty of coverage on the debt, and we get paid nice rates of return with the equity kickers. So it's very exciting. I've never quite been in this position where, you have so much leverage as you're negotiating. Everybody always, in my experience for the last 25 to 30 years, companies that are growing always need capital. So we get to cherry pick for the best deals. The relationships that we've had for 2 decades are inviting us into the best deals that I've seen in my career. And it's almost like private equity lending inside of a public holding company on the NYSE/American. So it's very exciting.
So Billy, you have a new lending platform being rolled out for digital power lending in the second quarter, which you're into now. When do you expect to make that lending platform available for people to see? And do you have any comments on what's going on with the lending portfolio?
Yeah, sure.
I mean, the lending platform. I apologize. The lending platform. I mean.
Yeah, we're in the early stages of putting the platform together. I think by the end of the second quarter, we'll be able to solidify that to the point where we're bringing in large amounts of capital from the outside. We certainly have permanent capital. We've done close to $18 or $19 million worth of loans since inception. We have some great intercompany loans, but more importantly, we have some great loans that we've put out to companies that are not under the umbrella of DPW. And they're current. They're paying us.
Well, Billy, why don't we talk about one of the ones you did? Let me give the intro to this. So we had an opportunity to lend to a company called IM Group, which bought Prep Kitchen in San Diego, and run by a great husband and wife team, Deb and Dave Kraus. And so what Billy did was went in and lent them $1.3 million. They took that money and they bought the 3 restaurants. Deb was from Cheesecake Factory, and they also were involved in Pure Nightclub. Very good operators of restaurants. And they had this goal of what they wanted to do to expand the restaurant chain. And they've already expanded to a 4th location. You lent them from DPW Lending $1.3 million.
Correct.
You got 100% of the equity. They got 50% of the equity, and they earn it as they pay the loan back, right? So kind of walk them through your thought process there, because that's really a pretty amazing transaction. And Dave and the loan is current, and Dave's group is paying back the loan, and you have equity at the same time.
Yeah, it's really, Todd, it was brilliant the way that we put it together with your help, but more importantly, it's a deal that works for both us as well as them, and they are phenomenal operators. They're professionals. They've both been in the restaurant business a long time. We bought these restaurants, in essence, at just above 1x EBITDA, which is unheard of. The companies are growing. They're kind of farm to table, which is very attractive out here in California, especially in Southern Cal. And it's moving toward that whole movement of being healthier, eating healthier. So they've got 3 restaurants. They're doing extremely well. They're well run. I lent them $1.3 million, got a nice coupon. And then and they pay me back every quarter as a percentage of EBITDA. And once that's paid off, it'll end up being a 50-50 split, but only after I've made a nice return, for the investors under DPL. So it's really actually quite compelling. They're opening like you said, Todd, a 4th restaurant. Looks like they're going to be opening in a 5th, but they have a formula that works. He's very organized in the way he runs it. He's disciplined on the financial side. They've been profitable.
Let's do this. One thing that maybe we put it out there to the public, but I don't think anyone's put this in their numbers, and that we get to start consolidating their revenue and their cash flow in the second quarter. So you're going to see a jump in total revenue of, I think Dave is forecasting like around 10 million for 2018. Yep. So without getting exactly technical, you're going to add about $1 million to $1.5 million to $1.75 million a quarter in total top line sales for DPW Holdings, because of the consolidation of IM and what will be now 4 restaurants. And I know Dave is eyeing a 5th. In talking to him about his plans, I know that he hopes to open about 35 in Southern California, kind of beach towns, because it is farm to table. So I would encourage any shareholders that are, everybody makes a joke about me eating. I haven't missed a meal in a long time. I've eaten there myself a couple times. You probably want to go there and check out Prep Kitchen, because it's really a pretty amazing place. And we're super proud to be in business with Dave and his wife, truly proven operators. And that's a testament to Billy, to what we put together with digital power lending. Billy, I don't want to, obviously we're on the call. We only have about another half hour, but we got to get to a lot of other stuff.
Sure.
But stay on the call, Billy, because I may jump back to you for a little bit, okay?
Perfect. Thanks, Todd. Appreciate it.
Okay, let's go to the next. So I'm going to jump to super crypto mining. This was a stressful business. I'll tell you that. We started off selling power supplies. Everyone knows late in the year we started mining at our own facility. Then eventually we had co-locations, and then as we got co-locations, we decided to get bigger in the space because we started off being in the power business. Obviously, when you have an underlying asset that has volatility from 8,000 to 20,000 back to 6,000, it's really kind of hard to forecast revenue here. It's a very stressful business, but we override that with the following information. That is, we're building a farm in the Midwest for 25 megawatts. We have machines up and operational. That farm has the capability of having about 20,000 machines. We have about 2,500 plus deployed or being installed as we speak. It changes because we're moving some from Southern California to the Midwest, but there's about 2,500 plus machines at this time. And I would say to you that towards the end of April, in about 2 weeks or so, we'll actually give the first official report of how much we're mining on a monthly basis. It's not hard. It's not difficult to add that up, but we want to be fairly consistent. Now, there were some changes here. We decided to go with the top 3 coins. We dropped a lot of the alternative coins. We were frustrated with some of the way that it was done, and we decided to focus on Bitcoin itself. So I think, Joe, in March we sold our Bitcoin Cash, right? And we swatched all into Bitcoin itself. And so now we have the portfolio's primary about 80% Bitcoin, about 10% Ethereum, 10% Litecoin, and we're pretty solid there. And we're focusing really on Bitcoin as a long-term value proposition. But there's the slides. We'll talk to you about some other things in terms of securing the 25 megawatt agreement. Darren's doing a lot of business with Coolisys and the offering of the power supply. We are in development, and this is important. I think people have heard about this. We are in development of our own ASICs miner. I think once we get to around 5,000 miners, we're going to attempt to install our own miners that we're in development with Coolisys Technologies. I know we're attempting to come out with a 20 terahash machine. There's a lot of technology behind that, and I would leave it to later, probably in the first quarter call, where we'll give you an update as to where the miner is progressing. It's not as simple as everyone thinks. ASIC chips are not that easy to come by, but Amos has a lot of great relationships in South Korea and China, and I know Darren's pretty excited about coming out with our own server. We'll use our own server first, and then if we're comfortable with that server, we'll then make it available to the public later on, early next year, maybe first quarter. So that's something that Darren's still working on. We completed our first round of cloud mining services. We do offer cloud mining, which launches very shortly. I think in May of 2018. That offering went really well. And then Darren, is very interested in how blockchain is affecting real estate, specifically real estate and finance. And on the next call, we'll have Darren kind of brief you as to what he's doing in the real estate space when it comes to blockchain. But for now, we've got over 2,500 miners. We're on our way to our goal of 10,000 for 2018. And we continue to execute there. Darren's team, along with the now infamous Crypto Joe and some of the people that are on Darren's team are doing really well, and we're pleased with it. We're starting to ramp in terms of now that the number of machines are increasing in terms of installation. So we're starting to accumulate Bitcoin. And this is something important that I want to convey to the market, and that is we've had a lot of debate internally about whether we would sell Bitcoin, we would finance operations through that. And as of right now, the plans are to stay long all of our Bitcoin. We have never sold a single Bitcoin. And if we do, I'll let the market know at the next call if we decide to do that. But as of right now, and I'm recommending to Darren and the board that we stay long Bitcoin. I believe it's stored value, and we see it as an investment in the future. So we do sell cloud mining services, but for the Bitcoin we mine, we're keeping it. We're staying long Bitcoin. That's really important. We're not selling. Let's go to the next call. the next slide. MTIX, I think that I really suggest you go to MTIX International and watch the 8-minute video. I promise you it will not be a waste of time. This is probably the largest potential opportunity for the company longer term in terms of these machines rolled out. There are presently 4 machines, of which one is now being delivered in Italy. There's a second one being delivered. There's 2 machines that were budgeted for the first half of 2018. You'll see that in revenue. We expect a significant increase in revenue because of the delivery of these machines. You know, I think we've covered the story before. This is something that's an incredibly green process. It's a dry process, significantly reducing environmental impact. I would direct you, since they are a public company trading under a symbol AVLP, and I said earlier they're going to try to uplist to the NASDAQ or American. That's their goal. I would suggest that I will pass on to you any releases that they do. This is a significant investment of ours. I think on the balance sheet, we've invested over $5 million in the company. We have a large potential conversion in the company, about beneficial ownership of about 74%. And we do own approximately 10% of the company in the open market. This is something we're very excited about being part of. I sit on the board, Will sits as CFO, and this is an integral holding for DPW Holdings. There's a lot more to come with this company, and we will continue to make sure that the information is available to shareholders. There's new acquisition opportunities. Yeah, when you read my annual letter, which I'm publishing later today, you'll see that we're going to be active in the activist space. This is something I've done for more than 20 years. I've been involved in companies that have been where we've taken a position. We tried to influence management. Sometimes they agree with us and we try to create value together. Other times they don't agree with us and it becomes a little hostile. And the third way that things take place here is that the companies are ultimately sold. There's nobody in this space we're in. I mean, I am not aware of many activist funds that are down here in the 25 to 50 million range looking for opportunities here. But we're going to be active in this space. We're going to be active in shareholder activism, and DPW Holdings is going to take positions. And people know that we've had conversations with WSI Industries. They make a lot of metal components that are used with Coolisys. They make, they're, effectively a large machine shop with some real estate. Management's very entrenched there. We visited with them. They made up a bunch of nonsense. We own 9% of the company. We're the largest shareholder. Ironically, they rejected our $6 offer, yet the CEO and the CFO were willing to sell at $6. So I think that they have to answer to their shareholders, and I don't think the story has played itself out here. I can assure you that we're not going away with WSI, and we think there's good value there, and we're gonna hold on for that. So this is a decision we expect to keep. We have other positions that are non-reporting, so we do carry there are several other public companies that we have below 5% positions in, that when we are required to by law, we will report if we go over 5% or if we go over 10%. The way the rules work is very simple, and that is that if we go over 4.99%, we have 10 days to report. If we go over 10%, we have 2 days to update our position, and we still hold tight with WSI. That story has to play itself out, and I'll get on to where we are in terms of active space. We're in active negotiation with commercial defense companies, hospitality. We're looking at other crypto mining opportunities. The acquisition of Enertech and Flexisphere are currently pending, and we continue to look at undervalued companies. So I'm going to conclude with a couple comments, and then we'll wrap it up and answer some calls. I look for the I've already said this a couple times. Look for Amos and his team to close the acquisition of Enertech if everything goes well there. Look for they're still active in this space in terms of making miners, defense, aerospace industries endeavors, medical field. As I said, they got a big order there. They're doing well. They're trying to leverage efficiencies with the company. We've already talked about Bill Corbett, what he's doing in rolling out his lending platform. and Darren is well on his way with his team to getting the 10,000 miners. All of those are subject to change. There's opportunities to buy miners at a better price now, so that's really helping us. If you believe in our thesis of being long Bitcoin, we're mining, we're staying long, we're consistent in our path. I read a lot of nonsense on the web. I read a lot of what I consider to be absolute total crap. But you know what? People can say what they want. I've never sold a share. My wife's never sold a share. I continue to buy. Our board is supportive. You should look at the people we put on the board. Bob Smith was the original CEO when the company went public. We were lucky enough to invite him to be back on the board. Jeff Bentz has a stellar record in the business out of Alaska, running a very big company up there. We're lucky to have Will Horn. I really encourage everyone to read the annual letter that I'm publishing later today. Let's go to the next slide. I've kind of summed it up already, so you guys look for the slides. I'm going to answer a couple questions, and then we're going to call it a day. Why weren't the presidents of the other subsidiaries on the call? Well, I believe some of them were, and believe it or not, I could not tell you where Amos is. That guy flies to more countries and is in more places than anyone I've ever met in my whole life. I've never seen a person work more days away from home in my life. Amos is a former military vet, Israeli military, and is one of the hardest workers you'll ever meet in your life. Is DPW stock still tied to Bitcoin? When I overlay the chart for DPW Holdings with Bitcoin, they look alike. I won't lie, I'm not happy that that's the case because I think we're building a lot of assets here, but one of the assets we're building is Bitcoin. So it is what it is. We live by the sword, we die by the sword, right? I'm not going to comment on how many coins we mine. We will report how many coins we're mining in the first quarter on our next call. But I will tell you that, as I've said, we've deployed approximately 2,500, 2,600 miners, and we'll report that when the time is appropriate. It is not difficult for people to figure out what we could potentially be mining. The goal for 10,000 miners has not been increased. We're sticking to that goal. I have a board that has some, mild concerns about how much we're deploying in the space, and right now we've stuck with the goal of 10,000. I think if we continue to roll out the 10,000 miners as planned, and things calm down in the Bitcoin arena, we may convince them to say, hey, let's increase the budget there. But right now we're on plan and on budget for that. Do I have any other questions? We're going to check and see if we have any other questions, and then we're going to. All right, we're checking for, do we have any other questions? Okay. Are they up on the screen? I apologize, guys. We're just checking on the questions you have here. I'd like to answer as many as I can. We have deployed over $8 million in the mining space as of today. So I'm stepping into the first quarter a little bit. We've deployed over $8 million in the mining space. That's one question. Hold on a second. Hold on. I've already covered the number of machines that are in production and growing. Audio quality was bad for Will. Apologize for that. But let me address the ATM. I get a lot of questions about the ATM. The ATM is a tool. I get a lot of people saying, stop diluting, and I get all kinds of, actually some threatening emails, and some threatening messages. It would be like, how do I explain this? It would be against my fiduciary duty to not look for the best capital cost. But we're very concerned about dilution. We're very concerned about how we put shares in the marketplace. We're always a very small portion of the market. We try to keep it to a minimal. We use it sparingly. It's not a free-for-all. We use it when we believe we can deploy that money towards accretive acquisitions that help the balance sheet and help the book value. So you'd want us to deploy capital, and we've been pretty clear that we want to raise money and deploy capital in the right places and grow the business. So we're going to bring our capital costs down. The ATM is a tool. It's not the only tool we would use. There have been some other financings that I'm never excited about giving out financing. I'm never excited about giving out warrants. Sometimes you got to. But for the most part, we're reducing our capital cost. We use the ATM sparingly. We are, and you'll see in the deck, we are looking, and Billy's doing some loans in the real estate space. We are active in the real estate space a little bit. We'll have more on that later. And so we use the ATM sparingly. It's not a free for all, or half the concerns that I read about, or the letters I get from people. Oh, the dam. We did close on the dam. The dam is a 1 megawatt or less facility. It can hold about 600 miners. There's a 2-acre space next to it that we plan to develop. That's run by an interesting team. But the dam is a small part of our opportunity to be in the green mining space. It's somewhat of an experiment, but we're excited that we closed on it. Believe it or not, the dam sells, as small as it is, it does sell electricity back into the grid. We'll be directing that electricity back to our own facilities. And that's something we closed on a while ago. You had a $30 million balance sheet. I think the dam was $300,000. So it's not something that we would normally, really talk about, except that it is an exciting green opportunity. First quarter earnings will be we'll report them before May 20th. That's the question. When will DPW be profitable? Well, DPW is made up of 3 subsidiaries we talked about, and then a bunch of investments. We've stated that our targeted goal is to get the company, the asset base solid, the business plans on track for the first part of 2018. The board's going to look really hard at all the operations, but I think as we go into the fourth quarter, we're looking to set the stage for the company to be profitable in 2019. I'd like to see it profitable in the fourth quarter. I don't know that that's going to be possible across all the divisions. The hospitality group is profitable right now. You could argue, and Will probably wouldn't let me make this argument, you could argue that super crypto mining is producing cash because of how many coins it's mining. But in terms of profitability, actual GAAP profitability, I would look for the first quarter of 2019, but we'll be talking about that a lot. Hold on one second. Oh, Lisa Thompson, is she on the call? But she can't speak? Hold on, Lisa, we're going to try to activate you. Hold on one second. Hey, Will, Lisa's question is, when will we break out segment reporting for the 3 subsidiaries? Yeah, go ahead.
Well, right now we have segment reporting by North America. We've broken up our segments into North America and European, and in part because the main subsidiaries that have generated the revenue, they're all consistent, right? I mean, if you look at Microsoft, it's in the defense business, and it's building RF type devices for the F-35s and such. And then if you look at Digital Power, they've got a big portion of defense business as well as the power supplies. So, and then of course you've got Power Plus, and that's the bulk of our revenues, right?
Well, you're basically saying, basically what you're saying is that because of the fact that we are effectively not further into 2018, you're not going to break out segments yet because hospitality's not in there. You don't have a lot of the other subsidiaries in there. So I kind of get what you're talking about.
Well, right at this point, from a financial perspective, they need to be, you need to have something significant to put in there. There's a threshold, right? A percentage. Right. And they're not close to it yet. Now, they will be.
Lisa, I believe you are active on the call now. Do you have any other questions?
Yeah.
Oh, it's echoing. Yeah. Yeah, I apologize. It is definitely, your call's echoing, Lisa. Lisa, I'll address some of your questions directly. Unfortunately, as we come up across the 1 hour, we're coming up to the 1 hour mark. Maybe Lisa, you could mute your phone. But what Will was saying about the segment reporting is in our 10K, we did break down different regions, Europe and North America. But since we're trailing in terms of when we're reporting, as you see the other subsidiaries get consolidated and they become more important, then you'll see more segment reporting. For example, we didn't even get the license for digital power lending until I believe, did we get it in February? So we didn't really have an opportunity to break it out. And we didn't break out the internal loans that digital power lending made possible for some of the subsidiaries. For example, Billy's done a good job in helping with getting loans for Microphase and some other of the companies internally. So those would be swallowed up in consolidation. And so we'll have to look at segment reporting, Lisa, later on in the year as the other subsidiaries come on board. All right, I'm going to wrap up the call. I appreciate everyone's patience. It was a lot of work for 2017. Will is truly a Marine. I've never seen anyone produce the kind of 10K that he did. The guy has worked nonstop, and a special thanks to him in putting up with all the transactions he's done. There's a lot more to go. If you have any other direct questions, please email us at IR at DPW Holdings. I'll be happy to answer them. If you have any other questions, you can also you can send it to me on Twitter. There will be a chairman's letter from me published later on today. I will send out a message to everybody when it's available, and I encourage you to read the letter. It's very comprehensive, and it'll cover some of the other things that we didn't cover on this call. Appreciate everyone's time. Will, thank you. Billy, everyone else, have a good night.
Thanks, guys. Take it easy.